Bitcoin is up 50% since that day in 4 short weeks. So I am wearing the Bitcoin orange pants today. I have the Bitcoin bull sock game going. So the cape and the big green candles. And I'm pretty psyched about, I'm officially declaring 3 weeks from Tuesday, this coming Tuesday, is the official start of crypto summer.
Mark Yusko, a well-known American investor and hedge fund manager, prefers to talk about the seasonality of the crypto market winter, when the prices of crypto assets are low, and the crypto spring, when they rise again. After that, summer arrives in all its glory, bringing with it record-breaking temperatures and massive tennis rallies. Yusko predicted a year ago that the crypto market would emerge from its infamous winter shortly after the 3 Arrow, Capital, Voyager, and Celsius contagion. Yusko claims that after we had finally emerged from winter, the world's digital asset industry was hit by Hurricane Sam, bringing with it a great deal of unnecessary confusion and media attention. Now that it's almost over, the managing partner at Morgan Creek Capital says the cryptocurrency market is ready to enter the summer season. ISCO predicted a summertime surge in cryptocurrency prices during the most recent episode of Blockwork Macros, in the Margin Weekly Roundup. According to ISCO, a surge of liquidity from the world's major central banks is the primary driver of the recent rally in the cryptocurrency and stock markets. Despite central banks' promises to reduce inflation at all costs, around $1 trillion have been pumped into global markets in the past few months, according to an estimate by Citigroup's global market strategist in London, Matt King, a few weeks ago. According to King's research, the People's Bank of China was the primary source of this liquidity pump because it has continued to inject liquidity directly into its banking system rather than following the trend set by the Federal Reserve and the European Central Bank. Yusko also shares his thoughts on the state of the U.S. economy and what the future may hold for investors during this conversation.
All the big leveraged bad guys are gone. And it turns out that I just did a presentation on this yesterday. Hash rate, new all-time high. Number of wallets, new all-time high. Number of wallets with greater than 0.1 Bitcoin, new all-time high. Transaction size and volume, not all-time high, but coming back to being close. Of my presentation yesterday was, crypto summer, surfing on a wave of global liquidity. China printed $1 trillion since October. Trillion with a T. Japan, another couple hundred billion. The Fed put $300 billion back on their balance sheet. So, we've got $1.5 trillion of liquidity sloshing around, and turns out people buy things that they like, and there's a whole bunch of people that like crypto, and Bitcoin and ETH are the biggest beneficiaries. The data is there's more buyers than sellers of ETH. ETH, I think I have this right, over the past couple weeks has even outperformed BTC. I mean, it was up 5% yesterday. It crashed through 2,000 and hit 2,100 very quickly. So I kind of come down on the latter part of your analysis to say, yes, there's a legitimate fear that people would unlock or de-risk some portion of what they've been staking. But I kind of come to it as there's no evidence of that, right? There's just no evidence in the markets of big liquidations of really anything. And there's some lower level coins that have just been going batshit crazy. It's tough to maintain optimism and energy in the face of constant beatings, right? The whole line, the beatings will continue until morale improves. Well, morale ain't gonna improve. I mean, you beat people down and they will sink lower and lower. And it was a summer of beatings last summer. Or fall. It was a fall of beatings. And bad people doing bad things, and then government actors doing bad things, and suddenly there's this reprieve. Now, look, I do think it's the calm before the storm. I don't think that then they fight you phase is over. I think it's going to come back with, Ms. Warren is assembling her crypto army. I think the economy is slowish. I think first quarter number is going to disappoint. Fourth quarter number got revised down. Still not horrible. And the last year, even though they're not going to call it, was a recession. It was a mild recession. 1% year over year, 0.9 year over year GDP. That's recession. That's a 2001-esque recession. And I think in the absence of the global wave of liquidity, right? Had China not printed $1 trillion, had, Kuroda-san as his, going away present, not printed another 200 billion, had the Fed not stepped in with Silicon Valley et al. With this BTFP, I would be more negative on growth. I would say, negative GDP growth in Q1. I would say negative GDP growth in Q2. I don't see that, right? I see a one handle in Q1. The biggest indicator is the 10-year. The 10-year yield has collapsed, right? It's down from 4 something to 3.4, something like that. And that's telling you that growth is decelerating, not accelerating. Yet, if you look at Chinese liquidity provision forwarded 6 months and PMIs, it would tell us that PMIs have troughed and that economic activity is going to rise, albeit slowly. But so I think we're going to avert the hard crash landing. This idea of no landing, I think that's just a silly idea. There'll be a landing. I think you see it in activity, right? I went to a restaurant with the family the other night, and it was bustling. It wasn't slammed, but it was bustling. And again, this is a nice restaurant in, we don't have very many super nice restaurants in Chapel Hill, but we have a couple of nice restaurants. And it was full, and that's a good indicator. The airport over spring break slammed. A lot of people traveling for spring break. But so to answer your question, where are we in the business cycle? I think we're past the trough. I think we troughed, middle of last year, third quarter or something like that. We kind of fudged the numbers with the SPR, right? We would have had much worse GDP prints last year if we hadn't drained the SPR and double counted the oil. I think that's a scam, but people believe it. If they start reversing that and start putting oil back in, that could juice that could hurt the numbers the other way. But I don't know. We'll see. If you look at the last 20 years, okay, all of the increase in equity is the Fed balance sheet. 100% of it. 100% of it. And so when equities rolled over last year because they tried the QT thing, what did they do globally? Turned it back on. The QE is back on, and we are back to QE infinity. And because you have to, right? You can't have this entitlement program, and this is everywhere. This is Western Europe, Japan, US, all have the same problem. Aging population that's been promised all this stuff. You put their money into these passive 401ks, 403bs, and you cannot have a situation where the value goes down and they have to cover it. They don't have the money. There's no savings. Savings rate is plummeted. It's plumbing new all-time lows.
Discuss Mark Yusko's analysis of the cryptocurrency market and the U.S. economy. Is it your estimation that we'll soon be moving on from crypto spring into summer? Leave your thoughts and feedback in the space provided. Thank you for watching Market Empire. If you found this video informative, please give it a thumbs up and don't forget to subscribe to our channel for more insightful content. We appreciate your support and look forward to bringing you more valuable insights and analysis in the future.